Mastering loss recovery in the share market for seasoned investors. Losses are an inevitable part of the share market journey, even for the most skilled and seasoned investors. Market downturns can shake confidence, derail strategies, and lead to emotional strain. But here's the truth. Setbacks don't define your success. Your response does. In this session, we'll explore meaningful strategies to recover from losses and rebuild portfolios, focusing on actionable solutions, emotional resilience, and long-term growth. Prepare to transform today's challenges into tomorrow's triumphs. Let's start by addressing the elephant in the room. No investor escapes losses entirely, not even Warren Buffett or the most experienced financial managers. Losses often result from factors outside your control, like market volatility or unexpected economic shifts. However, it's essential to recognize one key thing. Losses are not a failure. They are a natural part of the investment process. As seasoned investors, you know the market ebbs and flows. What separates a successful investor from the rest isn't avoiding losses, but how they react to and recover from them. Every challenge presents an opportunity to grow smarter, sharper, and more resilient. Understanding losses begins with seeing them for what they truly are, a chance to reassess strategies, reflect on past decisions, and emerge more informed. Accepting this reality will form the foundation of your recovery mindset, one that is calm, analytical, and focused on progress. After facing a significant downturn, emotions can run high. Fear, frustration, and self-doubt may cloud judgment, leading to rushed decisions and compounding losses. But pause for a moment. Breathe. The first and most critical step after a loss is regaining your composure. To do so, remind yourself that even seasoned investors experience setbacks. Losses don't indicate incompetence. They signify the natural uncertainties of the market. Once you adopt this perspective, you can start focusing on what truly matters, the lessons within the challenges. Begin by conducting an honest, reflective review of your portfolio. Analyze what led to the losses. Was it a result of overexposure to a certain asset? Perhaps market sentiment shifted in ways you couldn't anticipate. Understanding the root causes is essential before you can chart a course for improvement. Also, recognize which factors were under your control and which weren't. Controllable factors like allocation decisions or risk management provide areas for growth. Uncontrollable ones, such as geopolitical events, require adjustments to future strategies to better mitigate their impact. Once you've regained emotional clarity, the next step is diving into your portfolio for a detailed review. This phase is one of the most insightful aspects of loss recovery because it allows you to pinpoint patterns, inefficiencies, and opportunities for growth. Start by identifying overexposure to high volatility sectors or individual stocks. Diversification helps to spread risk, so if your losses stemmed from concentrating too much in one area, now is the time to rethink your strategy. Realign your portfolio to ensure it aligns with your risk tolerance and long-term financial objectives. Ask yourself these questions. Are your investment goals realistic given your risk profile? Have you balanced growth-oriented assets with safer securities that offer stability? Making adjustments based on the answers will better position you for recovery. Additionally, reevaluate how your assets are allocated, not just between stocks and bonds, but across industries, regions, and asset classes. A robust portfolio balances potential gains against calculated risks. Remember, diversification isn't just a buzzword, it's a proven strategy for weathering storms in the market. Strategic adjustments are the cornerstone of effective loss recovery. Reacting emotionally or rushing into new investments will only deepen the damage. Instead, adopt a methodical and data-driven approach. The goal is not just to recover, but to come back stronger and more informed. One effective strategy is rebalancing. This means adjusting the weight of your portfolio's assets to reflect your desired level of risk and return after losses. For instance, if your portfolio suffered significant declines in one sector, consider reallocating funds to diverse areas that offer stabilization. Diversification is equally important. Whether it's spreading your investments across various industries, exploring international equities, or including alternative investments like real estate or commodities, diversification minimizes your exposure to single-point risks. Market conditions also play a pivotal role. Take time to study current trends and projections before making significant moves. Have certain sectors become undervalued during the downturn? Smart recovery often involves identifying these opportunities and investing with long-term perspective rather than short-term gains in mind. Being disciplined is equally crucial. Understand that shortcuts and impulsive decisions aren't part of a seasoned investor's playbook. Patience and persistence are. A carefully structured plan will guide you toward consistent recovery rather than temporary fixes. When market losses occur, the psychological impact can feel like a second hit. Doubts creep in, confidence is shaken, and emotions can push you into irrational behavior. But as seasoned investors, it's essential to cultivate emotional resilience, the mental clarity and strength to bounce back with purpose. One way to achieve this is letting go of cognitive biases like loss aversion or the tendency to dwell on recent downturns. These emotions can paralyze decision-making when what's urgently needed are data-driven actions. Begin training your mind to focus on long-term goals rather than short-term setbacks. A pragmatic mindset sees losses as tuition in the school of investing. Every decision, whether it succeeds or fails, teaches you something invaluable. Reflect, learn, and transform emotion into insight that informs your next move. Moreover, remember to step away when necessary. Taking a pause from constant portfolio monitoring can do wonders for reclaiming your mental balance. Coming back with a fresh perspective often leads to clearer thinking and better decisions. Recovery isn't just a numbers game. It's about mental fortitude. Confidence grows when you stay calm, act strategically, and trust the process of long-term wealth building. Once your mindset is aligned, your portfolio reviewed, and strategies in place, it's time to act. Execution is where your preparation and patience translate into tangible progress. Start by setting focused, measurable goals for recovery. Are you targeting a specific percentage recovery in the next year? Or are you more concerned about reshaping your portfolio for stability? Clarity helps eliminate distractions and keeps you aligned with your objectives. When reinvesting, tread carefully. Consider dollar-cost averaging to gradually build your positions in promising markets, rather than lump-sum investments that expose you to immediate volatility. Keep track of market trends and adjust your approach as needed. It's also crucial to establish safeguards to minimize future losses. Incorporate techniques like stop-loss orders and other risk management tools, adjusting them based on your refined tolerance. Ultimately, the recovery process consolidates your learning. Use the lessons from your losses to shape a smarter decision-making framework. Every setback is another brick in the foundation of a more resilient financial future. Looking at examples of other seasoned investors who've recovered from downfalls can be incredibly inspiring. These stories show not only the paths others have taken, but also provide actionable takeaways for your own journey. Consider instances where investors re-entered declining markets with carefully crafted strategies, taking advantage of undervalued assets. Learn from their patience, timing, and diligent focus on fundamentals. Additionally, seek professional advice where necessary. Even seasoned investors can benefit from a fresh set of expert eyes on their portfolio. A financial advisor can help tailor recovery paths specific to your unique financial situation and aspirations. The combination of your own experience and insights from industry leaders creates a balanced approach, blending historical wisdom with modern analytics. Rebuilding after losses involves more than just portfolio adjustment. It's about reigniting your confidence as an investor. Remind yourself of the skills and knowledge you've accumulated throughout your investing journey. Even a seasoned investor faces losses, but their toolkit for navigating recovery is what sets them apart. Celebrate small wins during your recovery. You're making progress, learning, and evolving as a stronger, more informed trader. These victories, no matter how modest, will reinforce your motivation to remain disciplined and strategic. Reclaiming confidence also involves staying connected to your vision of financial independence. Revisit your reasons for starting this journey, whether it's creating generational wealth, funding retirement, or contributing to causes you care about. These motivations serve as beacons to guide you through the challenges. Losses in the share market, while painful, are never final. They're a part of the journey, even for the seasoned investor. What defines your success isn't whether you face setbacks, but how you choose to rise from them. Remember the steps we've discussed: regaining composure, thoughtfully reviewing your portfolio, making strategic adjustments, cultivating emotional resilience, and executing a well-defined recovery plan. Each of these components is a building block for long-term success. Keep in mind that losses don't diminish your expertise. They enhance it by providing lessons only real-world experience can teach. Embrace your journey as a continuous cycle of growth and improvement. Finally, stay motivated. The share market rewards not just knowledge and skill, but resilience and perseverance. Loss recovery isn't just about numbers, it's about fortifying who you are as an investor. Take charge, stay disciplined, and know that every challenge you face propels you closer to mastery. So remember, losses don't define you. Your strategies, mindset, and perseverance do. Let's move forward stronger, smarter, and more resilient than ever before.